One of the things that we want to make sure to get everybody to sort of be involved in this dialogue today, and I know we're standing sort of between you guys and lunch, but it is going to be an interactive discussion. So please get your energy up and let's make it very meaningful. So first of all, again, thank you for the kind introduction. I'm Platinova, Chief Data and Analytics Officer at Hsbc. Wonderful panel with me. We will get everybody introduced in a second. But the main thing that we're here to talk about is there are lots of very, very successful companies represented in the room. In case of Hsbc, we go back 150 years, back to our origins as Hong Kong and Shanghai Banking Corporation. But just because we were successful up until this point is certainly no guarantee that we cracked the winning formula, because history is absolutely littered with very, very successful companies that failed to innovate and failed to adapt to the times, and then just sort of fizzling out and not being with us anymore. So that is the crux of our discussion today, is how established companies keep up with the changing times. What is the role of innovation? What is the role of technology? What's the role of data in our competitive landscape? What our governments, what our regulators should be doing to help UK companies and to ensure that we are kind of well positioned on the global stage as well. And last but not least is how should we evolve our cultures? Because a lot of the companies, again, are quite established. The culture was forged perhaps at a slightly different time. And as things change, how do we make sure that we stay relevant? So to help discuss this, I will allow the panelists to introduce themselves. We'll go in order, and then we will open up with questions.
So Anita, Kimber, I'm here from EY. EY, very, very proud to be helping sponsor this amazing event, and I'd reinforce what a lot of people have said today. It's great to reconnect, and I focus very much on transformation with a particular passion and interest around fintech.
I'm Sam Hinton-Smith. I look after public policy at Stripe. For those of you who don't know, Stripe is a financial infrastructure platform that helps businesses to accept payments and to grow online.
And I am Rachel Kent. I am a financial regulatory partner at Hogan Lovells. I think Hogan Lovells might actually be as old as HSBC, and some days I think I might have been there that long. And for those of you who think you might not have seen me around recently, that's because I'm currently being the interim general counsel for the new UK infrastructure bank. So a slight change from Fintech, but I promise you there's lots of digital broadband rollout, so still technology. And I'm also very happy to be here. Thank you.
I'm John Cooke. I'm a consultant at TheCityUK, and I co-chair the TheCityUK's Liberalisation of Trade in Services Expert Advisory Group. I also work with the European Services Forum, where I'm deputy chair of their policy committee, and with the Global Services Coalition. So I'm a trade policy person very much.
Edward Bowles, Global Director of Policy for Meta Financial Technologies, which is a division of the company now known as Meta, formerly known as Facebook. And as it says on the tin, we deal with payments, crypto, digital matters for the whole company.
Fabulous. Thank you very much for the introduction. So I would like to remind everybody that, again, it is an interactive session, so get in the spirit. Second half of our chat will be Q&A, so start thinking up of your questions and either put them on the app. That's why I have, double tech here, a second iPad that I'll see your questions on, or just raise your hand, so we'll go to the audience. There is also a poll in the app at the moment, and there's one question for you to answer. Please choose two options of the answer, and the question is, does your business have plans to transform by further investing in disruptive technologies, such as blockchain, AI, the metaverse, anything else that is particularly disruptive we haven't mentioned, over the next 5 years. So it's a 5-year horizon. So do put your responses in the poll. We will discuss that. And with that, I will go to Anita with our first question. So we know that EY have made quite significant contribution to a Khalifa review. And that really put fintech and innovation more broadly at the heart of the national debate. How do we drive the scaling up of innovation, digital transformation within firms, as well as supporting the new players? So how do we make sure nobody's left behind?
That's a big question, and the first thing I'd say is we were very proud to be involved in the FinTech review, but there were many others of us who toiled night and day over that. So I think one of the beautiful things about the Khalifa review was that the industry, the regulators, government came together for the good of the country, and it was absolutely fabulous to hear John Glenn this morning really in the crescendo of his speech. Well, I thought it was in the crescendo of his speech, talking about fintech, talking about the Khalifa review, and talking about the Centre for Finance, Innovation and Technology. And if you want the definition of a blueprint for scaling innovation, then the Khalifa review is it. I mean, it is just a phenomenal piece of work, and you can tell it's phenomenal because countries like Australia, Singapore are picking this thing up as a blueprint for how they scale their own innovation. So woe betide us if we don't take that opportunity. And I say woe betide us because I don't think that we as an industry are recognising the jewel in the crown that is fintech within the UK. And my evidence point for that is EY really recently published in the last few days a review of boards and the makeup of boards across the UK. And if I look at financial services, less than 10% of board members right now have fintech experience, which is just ridiculous given that innovation and fintech is at the heart of our growth. So that's absolutely got to be put right. So I think there's so much more we can do. And if I sort of boil that down into 3 takeaways on what we need to do generally to scale in our businesses, and we're also an old business, and Rachel and I also feel as if I've been at EY since the start. I think there are 3 lessons. I think we all need to get a lot more curious about innovation and fintech, whatever discipline we sit in our businesses. You know, I've got innovators on the panel here who are just bringing richness and brilliance to the market, and we all need to get a heap more curious around that. I think the other thing is, and it kind of contradicts the way I've been framing this, we need to stop thinking about fintech as one thing, and I think the panel demonstrates that. I think the audience demonstrates that. The Khalifa review shines a light on that. Fintech is many things, and if you're just dealing with fintech by having an innovation lab in a dusty corner or in a bright shiny corner, because they're normally quite shiny, you've kind of missed the point. It needs to be integrated. It's many things, and it needs to form part of your fundamental strategy. And then the final thing is, to your point on scaling, we've got to stop thinking of fintechs as small. I think the panel demonstrates that fintechs aren't small.
Thank you. Very insightful. So continuing on the topic of Khalifa review, and over to Rachel with, what is your assessment on the progress that has actually been made on the implementation of recommendation? And with that, where progress is not as significant as we would hope, should the government really step in and focus our collective attention on?
Yeah, okay. Well, thank you, Kate. And Kate, we haven't met before, so I'm just going to say that I am a veteran of report writing. I have sat in particular next to this man and written many a report, but including during lockdown in the garden, we have discussed this, but never before have we had, at least to my knowledge, somebody whose job title involves Khalifa, in this case, Khalifa implementation. So unless Maha suddenly gets bored and decides to do something else, I think we'll be okay. But joking aside, I think, you know, progress has been huge, and certainly, to be honest, way beyond my expectation. I think in our chapter, so I co-wrote that with Kay, and in our chapter, I should say, we thought we would stick as much as possible in because we might get 3. So we put 30 in and we'd get 3. But as I sit here, I mean, I can't even recount all the things that have actually been picked up. Many of them were mentioned, including by Sarah. So CBDC, digital ID, crypto, open finance, more focus on technology and fintech and trade agreements, including through the efforts of this gentleman. So lots and lots, scale box, digital sandbox, the list goes on. So I want to say thank you to the government and to the regulators who've been so good at embracing this. But at the same time, I think we would all have to agree that progress still needs to be made. So things are still being baked, is how I would describe it. They certainly aren't yet out of the oven in most cases. So I think we need to keep focus on that. But there are actually one or two things that I think weren't picked up. And I'd probably pick out first what we called the Digital Economy Task Force. Now, before you groan and say you've got CFIT, how many working groups do you need? I think that the purpose of this was a very specific purpose. In our discussions, we had lots of great input from the industry, and we had lots of great input from government and regulators, but that input from government and regulators tended to be different. Different government departments said different things to us and often didn't know we were telling them what the other government department had just told us. So we thought it would be a good idea to have a task force that was cross-government and included regulators, but not the industry. They were understandably nervous about that. And we thought the output of such a group would be a comprehensive, clear strategy. So what actually are we going to do? What are we going to do on CBDC? What are we going to do on crypto or all these other things? Digital ID, really, really important. Are we going to do that this time or are we not going to do that? Priority, back burner, don't know. So that didn't happen, and I think that's a shame. It would have given us some clarity. Anita is looking at CFIT, of course, and I think that will massively help. But I think, at least we haven't discussed this, CFIT would have had a clearer agenda if we'd had that strategy to give that bit of direction. I think also companies trying to grow, trying to scale, including challenge banks, for example, would probably say they could do with a bit more focus as well. Maybe they would say that. So certainly I'll stop there, some key areas to still consider. I mean, Anita, I put to you that maybe the solution to this is every 3 years we have another Khalifa to absolutely, I thought you might say that, to keep the pressure on. But we must keep that pressure on.
I completely agree.
Fantastic. So with those emerging technologies, so Ed, I will go to you and we'll talk a bit about the crypto, which is, you hear every 3 seconds now in every financial services setting, and digital assets. So what do you think does the future hold in this area? And especially around the regulatory framework. How should the regulatory frameworks align themselves to the emerging technologies?
Well, thanks. And I'm glad CityUK has taken on this subject. And it's one that A, is dear to my heart, but B, I think is really pressing for the UK in terms of positioning itself. I don't think you can answer the question about crypto and digital assets without understanding what's going on in the wider ecosystem. And the reason why I brought my Quest 2 headset up is to try and visibly demonstrate what is going on. And last week we announced something called the Metaverse Standards Forum together with 40 other organizations across the world, Microsoft, Alibaba, Sony, IKEA, just to name a few, to design an international framework for interoperable standards for the metaverse. And the metaverse is already here. 2 weeks ago, on the 13th of July, we announced we were opening Horizon Worlds, which is our bit of the metaverse, to UK users who are aged 18 or over. And you access Horizon Worlds and the metaverse through that device there, and in which you then create your avatar and you go roaming around and exploring various subworlds, which makes it sound rather sinister, but it's not. In the metaverse. I attended a Billie Eilish concert with in my avatar form 2 weeks ago, which was a fascinating experience. And when you think about what that could mean for the creator economy here. And just to take musicians as an example, physical presence at a concert is obviously limited, but why should musicians not seek to earn additional revenue streams from the metaverse? You could sell an NFT ticket for a virtual attendance at a live conference through the metaverse for people wearing Oculus headsets. They could even have after performance meetings with the performer by paying an enhanced fee through NFT sales, which ensures they're the only people that could get access to those sorts of forums. BMW is already designing its cars wholly in the metaverse, their own metaverse. So they've got workers appearing in 3D, working on 3D digital models in real time together in a metaverse. And so the role of cryptocurrencies and digital assets are merely a part of that much wider, already fast evolving set of different ecosystems, which will start to be joined up once we've worked out the interoperability standards that 40 organizations have now agreed to start to work on with urgency. The team that I'm part of is working on a new digital wallet. I could well see a digital wallet accompanied by a digital ID with digital currencies in the form of CBDCs being an incredibly empowering vehicle for financial inclusion for those who otherwise won't have access to established traditional legacy financial services providers. All you'll need in that world is a mobile phone or some other form of access into your digital ID that's portable. So there's a phenomenal amount happening here, and just to see it through a very narrow vertical of products such as crypto assets would be really to miss the pace and scale of what's already developing. And I think it's something that companies should look at with real urgency.
Thank you very much, Ed. And over to you, John, because we've heard quite a lot about the ways in which technology is transforming the delivery of financial services, financial inclusion. But what do you think are the implications for international trade policy and its objectives?
Well, thank you very much. I think, first of all, rather as Edward also thinks, that one can't take a narrow view of this and just look at financial services, or indeed professional services. This whole technological transformation is really affecting all of trade in goods and services. One of the first points I'd actually make is that it's affected it a lot already, going quite far back. And yet, in terms of the international trade regime, there's a great deal of catching up to do. I mean, in a way, if you look at the international trade regime, it began with goods at Bretton Woods, as we were told this morning. That was one of the GATT was one of the agreements that was envisaged there. Then it was extended to services in 1995, but in a way that represented sort of retrofitting services to international agreements on goods. And of course, what was done in 1995 is already badly out of date in terms of the way that services are delivered electronically, and the whole pattern of digital trade. And I'm sorry to say that digital trade, all of the creative things that Edward in particular was itemizing, are under threat from barriers that regulators are imposing in terms of data localization, requirements affecting how far data sharing can take place internationally, other forms of regulatory divergence, and doubts about, in businesses, about how regulation is meant to be implemented, particularly when it comes to personal and non-personal data. These are all very open questions still. The solutions really have to be some kind of creative Bretton Woods style approach to looking at the issues. And if there were 800 people at Bretton Woods, you know, we may need another 800 before we can really itemize all of the issues that come together. I think there are grounds for hope that this can be done. It was only a few days ago that the WTO had a ministerial meeting at which some big risks to digital trade were at least temporarily avoided. There was a proposal, for instance, that the WTO's existing ban on customs duties on electronic transmissions should not be continued. In the event, ministers did agree to continue it for another 18 months in a kind of deal where nothing was agreed until everything was agreed, and other participants at the conference had all sorts of other issues. They also agreed to continue the work programme on what the WTO calls e-commerce and everybody else calls digital trade. These were important things, and they have avoided crises that could have arisen if, say, the world had been free to impose customs duties on electronic transmissions, which many governments might not have done, but some governments might have done, and it would have hit at the kind of OECD agreement on how digital services should be taxed. So there's all kinds of issues there. But on the other hand, all of those issues have only been cans kicked down the road, really, to the next WTO ministerial. So I think for all of us, there is a big issue there of how do we look afresh at what kinds of global agreements there can be on digital services trade. And I just repeat again that this cannot be just about financial and professional services. This is an area where financial and professional services are really closely linked into the fate of digitally delivered services as a whole, going as wide as all of the creative industries that Edward was referring to. So I see dangers here, some grounds for hope, but certainly a need for these issues to be realised. And in a way, it goes to Anita's point about what is only 15% of directors and controllers of financial services businesses have any practical knowledge of fintech and its methodologies. So I'll stop there.
Very, very thought-provoking. And Sam, over to you, last but by no means least. So on the subject of regulation, we mentioned Khalifa Review, we talked about international trades. How does UK fintech regulation compare to what you see internationally?
Thank you. Can regulation drive innovation? In our experience, absolutely yes. So like many regulated financial services providers, we talk to many governments and regulators around the world. And there are two things they always ask, almost always ask about the UK and are eager to learn about. And the first is the Khalifa Review. I think it's really important not to overlook just how important Khalifa is as both a statement of intent by the UK authorities, but also in providing an action plan that really gets into, to your point, Rachel, to the nitty-gritty of making the UK an even better place for innovation in financial services. The second thing that governments and regulators ask about is the UK's experience of open banking. And it's notable that nearly 9 in 10 jurisdictions around the world have some form of open APIs in banking, but there's still a real hunger to learn what the UK is doing, and whether it's Mexico or Canada or Asia or other parts of Europe, there's that appetite to understand the UK experience. And that matters because open banking and open finance are perhaps one of the preeminent examples of the way in which the UK has leveraged policy and regulation to drive innovation and even to actually to create a market. So because the UK has gone further and faster than other jurisdictions, we have today round about 6 million customers using open banking products in the UK. There's an ecosystem of hundreds of fintechs. And that's also reflected in the interest that we see from startups and scale-ups, from the unicorns of tomorrow. So we recently surveyed those businesses in the UK and across Europe, and nearly 2/3 said that open banking was an example of the kind of smart regulation that they'd like to see emulated. They'd like to see it elsewhere. Having said all of that, it is an incomplete process. So today there are close to 350 regulated open banking businesses in the UK. So what proportion do we think have a customer proposition in the market? Any guesses from the panel?
Half.
It's round about 1/3. So round about 1/3 of those businesses actually have an open banking product in the wild.
Yeah.
So what that says is that we're only halfway there on the journey. I think that's reflected in the experience that we see of open banking payments, where due to factors such as API downtime or limits on high-value payments or lack of visibility through the transaction chain, it means that customers, that consumers and businesses aren't getting the experience that ultimately we think they should get from that piece of innovation. So our message to government is that it's vital when you're thinking about regulation and innovation to offer sustained attention. Ed's already spoken about regulation of crypto and stablecoins and CBDCs, and I think that that's absolutely going to be the next field where it will be vital for the government, for the bank, for regulators to offer sustained attention over years.
Thank you very much, Sam. So we've heard from the panelists, and now it's time to hear from the audience a bit. So I've got lots of interesting questions here. Some are quite provocative, but let's see if there's any folks in the room that want to stick their hand up and ask us anything. Please. Don't know how the mics are getting around, but I'm sure it's
There's one coming.
it's coming.
Does the panel worry that we're conflating two rather different things? There's the need for financial innovation and fintechs and scale-ups, which I think we all accept is really important. And as earlier speakers have said, we do have a problem in the UK. We have all this pension fund money that somehow our pension fund money doesn't get invested in this stuff. Other people's pension fund money does. But then a lot of us are worried about the whole sort of crypto bubble, because some aspects of some crypto, and let's not say how much, are, environmentally and socially damaging Ponzi schemes. And how do you encourage positive financial innovation whilst not encouraging environmentally, socially and economically damaging Ponzi schemes?
Very good question. Anybody, any panelists?
Well, as the
You'll move.
financial regulatory lawyer in the room, happy to go first. But I think views differ on this, and as you won't be surprised to know, I've spoken to a lot of people, including regulators. But for me, proportionate, sophisticated regulation is absolutely the answer to that, because I know there are concerns about if you regulate it, you give it a kind of a badge of honour, so to speak, a certificate, a kite mark. But surely the whole point is you regulate it in order to make sure that it is appropriately risk managed, for example. But perhaps more particularly, you don't regulate the things that shouldn't be given that kite mark. So for me, the answer is quite clear.
Perfect. We've got another question.
Thank you very much, Alim Abubakri from TechSim. Thank you, TheCityUK, for putting together a fantastic session. Thank you for the insightful contribution discussed so far. My question to the panel is, if you had to think about the ESG realities in fintech, what would be the top three? Thank you.
Well, I'd like to
Anita will
take a point of view on that. So we had a fascinating discussion earlier about sustainability, didn't we? But for me, ESG includes the S, and Sarah mentioned it as well as from an FCA perspective. I think diversity and inclusion is actually such a critical part of it, and it's not something off to the side that is just a tick list and a name and shame list that comes out every year, because quite frankly, people aren't ashamed. You know, they put out the lists and they just carry on, nothing changes. But I think embedding true diversity in your businesses, and that is socioeconomic diversity, that's gender diversity, that's ethnic diversity. By bringing all of that in, you then truly create a workforce, an environment, an ecosystem that represents the passions that we genuinely have around sustainability, around all of those things. And so for me, the starting point, there's many things we need to do. We need to regulate, we need to do all of those things. But the starting point for me is diversity.
And I'll break protocol a bit and hop in with my own reflection. So one of the things that worries me as a woman who have spent 20 plus years in technology is the fact that fintech scene might fall into the same trap as the traditional technology scene, when some people, some genders and some other people feel very alone when they walk into the room, right? The predominant culture is something different. And a lot of times it is male engineers, and depends on where you are in the world. It could be different ethnic makeup, but it's that homogeny that I think fintechs need to watch out for. And if they want to be E, S, and G players, they really need to figure out how to make that diversity and inclusion real. How do people feel included, not just what you put on your annual report? So that culture point is super important.
Yeah.
Sam?
And I think that there are a couple of things that financial technology companies can be doing. One is to hire very deliberately from underrepresented groups, and to work with universities and schools and other institutions, not just to build the talent pipeline, but to get a diverse group of individuals interested in, for example, becoming software engineers. And I think the other is using our products to expand economic opportunity.
Ed? Comment.
Look, I think it's linked to the previous question as well. We published our annual sustainability report yesterday. The company achieved net zero already in April 2020. One of the things that we are working on very closely is with our supply chain, to try and make sure they also are looking to achieve net zero status by 2030, not just for energy, but for water as well. And, you know, we're big enough to be able to build power supplies of our own that are renewable, to power our data centers. And when I went to the opening of our Odense data center in Denmark, we had built a wind farm in Norway to supply the power to it, and we recycle the heat from it into the local communities. That sort of thing, trying to take, particularly when you've got the revenues to be able to afford it, an holistic view. But it's not because you don't have the ability to build your own power supply that you can't also insist on having renewable energy supplied to you for what you're doing. And that's particularly the case in the emerging digital economies, and indeed in the crypto markets. Energy consumption doesn't mean it has to be non-renewable, and indeed it should be renewable wherever it can be.
Thank you. So I will pick one of the, probably my favorite question out of these. We are in a period of global regulatory fragmentation. Isn't it a pipe dream to expect that data won't be caught up in that process? Anybody feels moved to hop into that one?
Could you repeat the last bit of the question? Sorry.
Isn't it a pipe dream to expect that data won't be caught up in the process of regulatory fragmentation? It's precisely the point that you made, that data is being caught up in those regulations in different countries that are looking to repatriate or fragment.
I'm afraid it is a pipe dream to think that it's going to escape, and that's why it needs more positive action backed by business to try and find ways through this.
I mean, I think what's important, is setting benchmarks. And although there were challenges to the EU-US data transfer arrangements. Those have now been overcome, and we need to make sure that it's that sort of very, very active and time-sensitive intervention by political authorities to make sure they've got agreement that are, basically legally sustainable when it comes to challenges, but also all the relevant protections are built in as part of that. And once you get a critical mass of economies like the EU and the US, then others basically have to decide to make choices as to whether or not they want to become isolationist or not.
And if I may, I think there's something, if we come back to that regulatory angle here, and Kate, you'll have your own views. I mean, this is your area of specialisation, and I'd be curious to hear your views. But if you look at something like consumer duty, which is shifting regulation to outcome-based, the more you think about outcomes and the more you're held accountable to outcomes, and we all should be held accountable to outcomes as businesses, the more you think about the variety of data you're using, external data, internal data, and you think about the implications of that. And that warrants, in my view, a huge amount of thought and resource and effort applied to it. But Kate, I'd be really curious in your views.
I'm in a hot seat now. Well, that is my day-to-day, amongst other more interesting things, is to figure out how to navigate a landscape that is quite fragmented and is getting more fragmented by the second due to various geopolitical events. Hsbc operates in 64 markets, so that's why it's very important to figure out, where data can and cannot be and how it can flow for what purposes. My reflection on that is we do need to have a lot of reimagining of the policy, global dialogue and reimagining of the policy that is very, very holistic. I hope it will happen in my lifetime because it'll make my job much easier, but I haven't seen that really happening yet, but very, very hopeful. And then second point is where Anita started us off on the mix of skills that you need in order to reimagine has changed dramatically. One has to take a very open-minded, very wide look at the entire ecosystem that is powered by this data, right? And figure out how to craft a regulation that keeps companies accountable and safe, but at the same time does not hinder that flow of trade that everybody wants to see. And for that, you need technologists, you need privacy specialists, you need lawyers, you need huge multidisciplinary teams working with governments and regulators. And again, that's another one that I hope to see more of, that multidisciplinary engagement.
And I think you need a reasonably open mind on the architecture for where the sources of agreement are going to come from. I mean, Edward instanced the case of major markets reaching agreements between themselves. That's certainly one approach that's very likely to be important. But on the other hand, the agreements they reach must not be such that other much smaller markets are never in a position to accede to them, so that, because if that becomes the case, then those smaller markets, small and medium-sized enterprises trying to enter the global market through digital means will not be able to do so if there's the kind of standard with which they're not in a position to comply. And so somehow one has to cater for that as well.
Absolutely, and Ed made that point again about that financial inclusion, right? And folks that cannot physically make it to the concert, perhaps they're in the country where they can travel due to restrictions or due to financial reasons, but they wish to attend. How do we make sure that in whatever we craft, we do not create a more divided world? How do we promote that inclusion for all markets and get them all into a level competitive field? Right, I think we've answered another question here that was about the sort of reimagining of trade regulation. I think we have maybe time for one more. Anybody from the room? No takers. Well, I will read one out from here. What role should regulators take to make UK specifically more competitive and innovative? That's a good one to close with. Ed?
I'm happy to jump in. I mean, so today is the day where the European Union institutions come together for what hopefully will be the final trialogue on MiCA, markets in crypto assets, and it's quite clear that the EU got out of the blocks pretty quickly on that, but there is also something called last mover advantage, which I hear being kicked around in discussions at the Treasury and elsewhere. And what they've done, obviously rightly in some ways, is see how the debate has evolved, but also see how quickly the market has changed in the years that MiCA has been going through the co-decision process. And it's moved a phenomenal distance. And in fact, 70% of the council meetings in MiCA were spent on something called the ART pillar, which is basically the asset reference token pillar, which is basically something that nobody in the market is basically proposing anymore. So it shows you how quickly things can move on whilst regulators try to grapple with creating a framework that is not just fit for purpose at the time it comes into force, but is durable 18 months, 2 years, 3 years later. I think the UK is taking stock of how A, industry has evolved, and B, what the initial attempts at creating a regulatory framework are. And I really look forward to seeing how they then manifest that in proposals of their own to deal with the issues here. But obviously, ones that shouldn't be isolationist, they should be compatible with the way in which other emerging frameworks are coming out. And the US, as you know, is looking at it through the prism of an executive order that Biden issued about 2 months ago, which is in some ways slightly more holistic even than the EU approach, because it runs right through from CBDCs through stable coins and into commodities effectively.
Thank you, Ed. So you've definitely reminded us that early bird might get the worm, but only second mouse gets the cheese, right?
Right, exactly.
Going with this. And we've heard from the regulator, right? We heard about sprints in that policy development. Sam, any closing remarks from you for us?
Well, I was going to say one of the pieces of feedback that we get from startups and scale-ups is that they actually want the clarity of having a clear overarching regulatory framework, but then the ability to iterate over time.
Right.
And that's a flexibility that the UK now has. And I think it's about that combination of certainty and then adaptability to market developments, which is incredibly important to the digital economy.
Yeah.
Perfect. Well,
This is a kind of issue that does come up, particularly in relation to some of the things the European Union does. I think what's called the Colditz problem, that you build a fortress, but it becomes a prison. That you set up a very strong regulatory system and you seek to export it, but if other countries don't adopt it, you've become imprisoned in your own fortress by being the first mover, when in fact later movers really have quite other ideas.
So strong but flexible regulation, I think, is the consensus from the panel. Thank you very much. We shall close now, and thank you. Being a great panel, and thank you for being a great audience.